Hello traders, welcome to your daily market update for Tuesday the 9th of June 2015, and overnight we've seen some pretty interesting price action as just about all currency pairs gave back the movements that we've seen throughout the non-farm payroll. The market was trading in a very lackluster way until we did have some better than expected data come out from Germany, and that helped boost the euro dollar slightly in the short term, but then really the market was contained and really focusing on German bonds and a rumor that Obama mentioned something about the US dollar being expensive, which of course was later on falsified, and I'm sure that somebody made a lot of money on that false claim from Reuters, and I'm sure that that will be getting investigated as the market really then continued to sell off the US dollar, and we've seen German bond markets really start to fall, and it's very evident that the bond market right now is really controlling currency pairs. So we need to keep an eye on the bond market and really have a look at seeing how things are going to play out in the coming sessions. So really this week we have coming up for us the not a lot of data for the US, not until Thursday and Friday, and I believe that the US dollar index will probably consolidate now around the levels that we are in, and I'll show you in a minute a slight wedge pattern that is forming, and the consolidation could remain until later on this week. The market is going to be turning to the Aussie dollar, New Zealand dollar, as we've got some data coming out, and we've seen that some data came out today. If we have a look up here on the charts, you can see that we did have worse than expected PPI and CPI coming out from China, and that's going to affect the Australian dollar as the Chinese economy continues to slow. Sure, we had an increase in Australian home loans. The rest of the data was quite flat. I think overall this will weigh down on the Australian dollar, which was boosted overnight, and it was just all on the back of the US dollar being sold off on those Obama fears and the big shifts around in the bond markets. The German BUND market actually fell the hardest as people were talking about the fact that the US dollar being so high, and Obama's comments is what triggered it in everyone's mind, will possibly make it harder for inflation and growth in the US, but it will also help other economies such as the euro and all other economies. So they all took a little bit of a rally on the back of the market tuning into those thoughts, and it continued right through the session. It didn't die out as I expected it would as soon as those comments were falsified, but nonetheless we are in a new trading day. Yesterday was really a day that there wasn't a lot happening, and the market was just happy to latch on to any piece of information it could, and it did so in spectacular fashion. Although we do have the uptrend, and the trends are still intact, so the movement could be just a short-term one. Let's have a look at what we've got coming up on the calendar today. We have trade balance coming out from the pound. That's going to be interesting, as well as GDP for the euro, and we'll see whether those figures are going to change at all. And we don't really have anything but JOLTS job openings for the US. So it's going to be a session in the European before we really get much happening. I think that it will be the pound that will kickstart the session. Everyone will be focusing on the bond markets, so we need to keep an eye out on that. If we go to the dollar index, you can see that we did have a pullback here, and although we did have a pullback, we are still in an upward trend, and we just come back down to test the 94.75 level that's been historical support in the past. So we did have a bit of a pullback. We did get an engulfing bear candle formation. It does suggest that we do want to go lower, and it has started off going lower in this session, but I'm very interested to see whether this support level can hold up. And then this is the wedge pattern that I was mentioning, and a breakout of this. I believe that we're going to get a breakout to the upside eventually. Will be the next move for the longer term trend to continue. We are having a consolidation after what has been a fairly spectacular rally, and the US dollar is actually up 6%, and if it was to rally another 6% on the back of the Fed raising rates, I'm sure that we will see the impacts after that on the inflation cycle and things like that. So in far as the US dollar is concerned, I believe that it is in a sideways motion. The euro, we need to keep an eye on the data tonight for the GDP and the pound's trade data. And we also need to keep an eye on the bond market. So if we can, I'll see if I can bring that up for you here. And we can have a look at the bond market, which, as you can see, we did get a bounce, and this is a daily chart. I don't think I can go lower than that. Nope. And I think that we could, if we do continue to see a bounce here in prices, we could continue to see the bounce in the euro dollar. So keep an eye out for that. It's going to be an important one to keep following. Here is our charts, and as you can see, we did get a bounce here in the New Zealand dollar, performing an engulfing bull candle formation. It does suggest that we want to move higher. However, we are still in the technical downtrend. No, nothing has changed as far as that's concerned. I'm still going to keep an eye on the resistance level, historical support over here that could become resistance once again. So any moves higher, I'm sure, are going to test many resistance levels. However, we do have some New Zealand data coming out, and the New Zealand RBNZ is to deliver their information. I'll be talking more about that tomorrow, and then the Australian Glenn Stevens delivering his reasoning for keeping rates on hold last Tuesday. So we have a lot to follow in terms of the Australian and the New Zealand pairs coming up. As you can see, also mirror image here really, the Australian dollar bounced an engulfing pattern. We have started to form a bit of a base here, a bit of a support level at 76 cents. And if we do get a break of that, that will be a major level that I'm sure there's a lot of stop losses placed down here for those that are expecting a bounce and the US dollar to continue to fall as they speculate that the Fed won't raise rates. But however, should the Australian dollar actually come under a fair bit of pressure, I'm sure that once we break this level, we will get somewhat of a squeeze, and positionings will have to change as well. So it'll be a long squeeze that would happen, and price action could unravel quickly. So having a breather around this area isn't too uncommon, as we have had support here historically, and we did have a big slide throughout this period. And it is healthy for the markets to have a bit of a rest or a bit of a bounce. So right now I'm still bearish on the pair. I'm still considering my downtrend line as being intact, and we will see how the pair plays out in future sessions. The euro's come up to test its downtrend line. As you can see here on the daily, we did get a bounce after what was rejected, but I still believe this 50 level is going to hold up and should remain resistance, as there hasn't been any progress out of Greece at all. We aren't getting anything of positive nature since the last talks have broken through. Greece still refuses to accept the latest proposal, and Germany's running out of patience. So the downside is definitely my favour right now for the euro, and the bounces that we're getting now is just the last of the hopefuls hanging on to the fact that Greece will not get kicked out, as many believe that it's too big to fail, so to speak. The Great British Pound also had a bounce here. We have started to consolidate, and if I zoom in for you, you can see that we did have the falls here of the non-farm payroll, bounced back up, but we are still below the Fib 50 level and the rejection here last Thursday that I'm still focusing on, and I'm really looking for an opportunity to get back in short and hang on to this for the short term and swing trade this lower, as the US dollar will pick up momentum at some point. Tonight's data from coming out of the pound will be interesting. If it is weak, well, that could kickstart the falls. And if not, we could actually push back up and retest this level. So keep an eye out for that. US dollar versus the Canadian dollar has pulled back to 123, 124 area, and it was that historical major support level. It's now trying to be support once again, and we'll see whether it holds up. If the US dollar holds up above its support levels, I'm sure that we'll see this here contain or reasonably so, even if it breaks through by a couple of pips, as the support level here is more of a support band. It's not a support line. As you can see, it tests many different levels around this price action. So don't get too detailed in terms of trying to identify an exact number of where support is. We have had a phenomenal run here in the US dollar versus the Japanese yen, but we did have a little bit of a scale back at 124. It isn't an engulfing daily candle, and we are testing the historical uptrend lines. We'll see how we go. For my money, I think that there is support at 123,700. And if we do consolidate, we could consolidate around these regions once again after that great move. And then I'll be looking for further breakouts to the upside. If we do break through this level, I will be looking for some short-term shorts just to make some money on the downside before I think that we will find support once again. Well, that's it from me today. Keep an eye out on the data. Keep an eye on the bond market. It is controlling the euro as well as other bond markets. I'll be back again tomorrow. So until then, trade well.